Hello and welcome to Pro Trader Strategies Market Commentary for Tuesday, May the 15th. My name's Eric Wilkinson. Some of you may recognize me as the Wolfman from CNBC, Fox Business, or even the Wall Street Journal for my commentary on everything from economic to geopolitical and market analysis. Please take a moment to read over this disclaimer as it says that everything I say in these commentaries is not a solicitation to buy or sell any of these securities or strategies. We're here to teach you these different strategies, but it's up to you to implement it in your portfolio in your own way. And please remember to past performance of any trading system or methodology is not necessarily indicative of future results. All right, having that out of the way, let's get it on with some economic data across the pond. Not a whole lot, but Great Britain did come out with average hourly earnings, came in at 2.6%, expected to be 2.7%, so slightly lower than expected there. Climate count change out of Great Britain, which is basically their unemployment numbers, their unemployment claims, came in at 31.2 thousand, expected to be 13.3 thousand. Now they have a high unemployment rate at 4.2% anyway, but a lot of people coming out of the woodwork looking for a job in Great Britain, it looks like, because you see those claims jack up, unemployment rate doesn't move. That means there's a lot of people looking for a job. Then on to the United States, we got core retail sales coming in at 0.3%, lower than the expected 0.5%, but last month's number was revised from 0.2% to 0.4%. So kind of a wash there on the retail sales number, or at least on the core retail sales number. On the retail sales number, it came in at 0.3%, expected to be 0.5%, and they revised last month's number up from 0.6 to 0.8. So again, another revision kind of melding out the headline number. Empire State Manufacturing came out with a really good number, coming in at 20.1, expected to be 15.1, so much better than expected there. Business inventories lowered to unchanged, expected to rise by 0.2%, so that's good for the overall market. And the National Association of Home Builders Housing Market Index came in at 70, expected to be 70. So that was one of the reasons why I played Home Depot to the upside. I was talking about that yesterday, is that I thought that a lot of that construction was moving up, meaning some of those guys are going to Home Depot to buy some stuff, and same with the overall retail sector. I think a lot of people are going to get out there. We'll talk a little bit more about some of those details a little bit later on. But crude oil futures moving lower by about 20 some odd cents, still in the 70s and above this midline for this trend channel here. But it is struggling to get above this 61 Fibonacci. There's a lot of lines coming into flux right now, but nobody's happy in the markets because just about every market is down. Gold futures really having a struggle today, down over 24 points, as you can see. Broke below the 200-day moving average, and it was all off to the races. Looks like my 1280 area is starting to look like it might come back into line. So and then the 1220 is where I thought it was going to go as well. So test this low here, but that's got a ways to go. But breaking through all of this support here and off to the races to the downside. Bitcoin following suit, everybody selling off all their assets to down a couple of 100 points. I expect it to go down to that 58.80 still. Seems like a long way away, but I still think it's going to get there. Bonds, 7-year low here. And what does that mean? 7-year low. When bonds go down, the yield goes up. So what does that mean if we have a 7-year low in bonds? That means we have a 7-year high in yields. That means if you haven't gotten your mortgage refinanced, it is starting to go up. I'm telling you, there is a world of hurt coming to California with these interest rates going up because everybody there is still on an adjustable rate mortgage or only on the interest-only mortgages. Remember, housing prices in California are astronomical. Most people can't afford that, so they're doing these crazy little mortgages like interest-only and things like that, or adjustable rates. So all of those guys are going to start feeling the pinch. And when you start feeling the pinch there, that could start hurting overall consumer spending. We'll have to keep an eye on that. That's my theory on there. VIX, the only thing that's basically green on the day because the overall equities are falling out of bed. Not quite into that 15 handle that I'd like to see, but it's trying to get there. Dow Jones Industrial Average off almost 200 points. not quite the lows of the day, but pretty close. Yesterday's made a very nice topping pattern in most of the equities, and we're getting confirmation big time to the downside today. As you can see, this doji late day sell off, and then today confirmation. It's sitting above the 9-day moving average as of right now. So that is a short-term relief for anybody who is bullish. E-mini S&Ps have come off and tested the 50 Fibonacci extension here. That is going to be a pretty important level for the E-mini S&Ps, down over 21 points today. But again, topping pattern here, confirmation to the downside. I think we're going to start seeing a little bit more of this rollover happening in the next few days anyway. This is the daily chart of the E-mini S&Ps. Overnight inventory, they are not trying to flush these guys out lately on the upside nor to the downside. Overnight inventory getting short, and then on the day session we came out and socked it to them basically. So equity is down, bonds down, gold down. Basically no flight to safety today other than the VIX. All right, on to a couple of things that I've done. In my IRA and in my margin account, I basically took the only trade on the table for earnings, and I don't have anything set up for tomorrow. There's really no decent earnings coming out for tomorrow, so I'm going to try and find some other strategies to do later on today to add to my portfolio, because it is pretty set up for just earnings, and now we're starting to wind down. So I'm going to start thinning that out, add some other stocks to it, so keep your eyes out for that. Home Depot in my IRA, I went in and sold the 182.5 puts and then defined that risk by buying the 170s. I was looking to buy it for a nickel. I got it a little bit better than that. I did that overall strategy for 52 cents. I bought back just the 182 calls for 44 cents in my IRA. Over in my margin account, I went in and sold those same May, sold the 182.5 puts in there for 55 cents. Bought those back for 44 cents. Yes, pretty close to a scratch. The 82.5 puts below where the market maker move was. The market maker move on this was to go down to around 186, was where it was priced in, 186, 185 or so. So I went down to the 182.5s to get below that, nice, well below that. But because of that move, I didn't get a lot of volatility coming out of it. As you can see on the open, the volatility came right back to where it was. So I didn't get a whole lot of love here. The market did kind of bounce back in my direction right for the open, but then this was on the before the open, right on the open, and I was basically changing it. I got out of my IRA rather quickly, but the margin account took a minute. I had to wait for a little bit of a bounce as I was trying to chase it. I tried to put in a quarter bid, ended up having to pay up to 44 cents for those. And that's it for today. That's all I've done. Friday's webinar is going to be a great one. It's going to be on the short put butterfly. That's a really great strategy for a trade that's kind of been range bound. You're expecting a breakout, but you don't know which way it's going to go. You just see that rubber band winding up. I'm going to show you how to set this strategy up. Not like you're going to find online. Online, they're just going to tell you how to build it. Or you can even look at your platform and just set it up for a butterfly. But that's not always the best way to do it. The reason why is because there's different ways to set this strategy up to increase your probabilities of success. You have to collect a certain amount in order to achieve those probabilities. I'm going to show you how to do that in Fridays, or not even Friday anymore. It's Thursday. We're going early. So check it out at protraderstrategies.com for those rules. Really important to increase your probabilities of success. Also, give me a thumbs up, thumbs down, like, or dislike at the bottom of this video. If you give me a dislike, let me know what I'm doing wrong so I can fix it, all right? If you can't take that, take it easy.